Hello and welcome to the Accounting Services presentation on understanding accounting best practices in ConnectCarolina, UNC's accounting system of record. My name is Nick Shives. I'm a CPA in Accounting Services, and I've been with UNC for a bit over a year now. With me today are Daisy Allen and Hua Shen, also in the Accounting Services team. Today we'll be focusing on the balance sheet and journal entries, as well as some reporting tools. So with that, we'll jump to our first poll question. The question is, what is this session about? And the answer is accounting and reporting for OSP projects. So today we're going to try to cover a lot of topics related to ConnectCarolina and accounting in general. The goal of this presentation is for you to better understand the ConnectCarolina system, why journal entries are structured the way they are in ConnectCarolina, how to get your journal entries approved by reviewers on the first attempt, and related ConnectCarolina reports and queries. We'll start with some background on accounting principles, then move into the account structure. Then we'll talk about the different ledgers, reporting tools, and types of journals. Finally, we'll have time for questions at the end. Please note that some of this presentation is geared towards the research closing team that touches the balance sheet accounts. Many of you may only use RAM reports and focus on the income statement, but this presentation will give you a peek behind the curtain. I'll start us off with some fundamental accounting concepts. To understand the ConnectCarolina system and its accounting structure, we first need a basic understanding of accounting principles. For some in the audience, this may be just a refresher, but for others, it may be the overview that helps solidify your understanding of business transactions, journal entries, ledgers, budgets, and related financial reports. Either way, I hope it's useful to you. So the classic and fundamental accounting equation is assets equals liabilities plus equity, abbreviated as A, L, and E, respectively. And there's a legend here on the slide for you as well. Please note that equity is the same thing as fund balance, abbreviated FB. But what does that really mean? Let's take a moment to rearrange the formula and rename the variables. So assets less liabilities equals fund balance. In other words, what you own less what you owe to others equals your net worth. And now let's bring that concept closer to home. For example, your bank balance plus your car less your car loan balance equals the stuff that's legally yours. And the same thing applies to your paycheck or your house. Now, hopefully, this is starting to make more sense, and we see why everything has to balance. Another key concept we'll see in all accounting transactions, journal entries, and related reports. The assets, liabilities, and fund balance are all balance sheet accounts. So you may be wondering where revenue and expenses fit in. They're essentially part of equity or fund balance, and we can expand the original formula to assets minus liabilities equals fund balance plus revenue minus expense. We'll explore each of these classifications and concepts as we move through today's presentation, including some examples with details available in the appendix. At its core, accounting represents the ability to be able to understand a transaction at a glance. You might think it takes a lot of specialized or technical knowledge to be able to do that, but let's look at some examples and I think you'll be able to understand. We'll then see how some examples fit into a trial balance, the ledgers, and a simple financial statement. The examples we'll use are UNC chart field accounts, and we'll see how they fit into ConnectCarolina. Moving on to the account structure. The high-level account structure in ConnectCarolina is set up with asset, liability, fund balance, revenue, and expense account categories. This mirrors the structure of the accounting formula we just saw in the previous slides. The account number starting with 1, 2, 3, 4, or 5, as you see on the left, designates the nature of the transaction or the substance of it, or what the transaction really is. For example, asset accounts such as cash start with 1, whereas accounts payable accounts start with 2. The rest of the chart field string, including your fund, source, department ID, and other chart fields, designates where the money is coming from and going to. And we'll see those components detailed out on the next slide. On our previous slide, we discussed the account number. Here are the other components of the chart field string in detail. This quick reference card is available online for you to reference, and a link is included in the appendix. So starting at the top left, we see a business unit, which designates the legal entity, for example, UNCCH. The fund shows which type of fund group, whether it's state, trust, or F&A, restricted or unrestricted. For example, you may mostly use Fund 252. Or, for example, source 15101 would be an unrestricted trust source. The source is whose funds are being spent, and often where the money is originating from. For example, a restricted gift from an external donor. The department is who is spending the funds. You probably already know your department ID. And many of your journals probably focus on project ID, which is in the bottom left. Next, we'll see an example to demonstrate. For the sake of time, I will not be walking through these examples in detail, but they are available in the appendix for reference, and I can cover them at the end if time allows. The list of transactions on the left-hand side of the slide represents some common everyday business transactions, which ultimately would end up in ConnectCarolina. These examples focus on account number just to keep them simple. You could add the rest of the chart field string to each of them to apply to your specific circumstances, but this presentation will not get that detailed. Please be careful in selecting your chart field strings, as it needs to be matched up correctly to your project ID's designated chart field strings. So in example 1, suppose a department sold goods or services to an external entity and sent them an invoice. We would debit accounts receivable, an account starting with 113, and credit revenue, an account starting with 4. Those account numbers tell us what the transaction is. In this case, billing an internal or external party where we expect to receive cash in the future, and we're earning revenue for it. Again, the rest of the chart field string, which tells the rest of the journal's story, such as department ID, would be specific to your circumstances. So when a transaction is processed in the accounting system, whether by a subsystem or a manual journal, it will end up in the general ledger. The color coding on this slide is to help visualize the account number structure. For example, assets here are green, expenses are red. But overall, you can think of the general ledger as the comprehensive detailed listing of all transactions and journal entry lines. The screenshot here is a detailed listing of the 10 examples from our previous slide, which is effectively the general ledger for this example set. In this case, the focus is on account number, dollar amount, and description. But in ConnectCarolina, the general ledger would include the entire chart field string and other journal metadata, such as the journal source. Now, many OSP users may primarily use RAM reports to find your project financial information rather than the ConnectCarolina general ledger data queries. Here you can search by award number, project ID, department, and other non-chart field string attributes. The RAM report's focus is on comparing budget to expense life to date, whereas in ConnectCarolina reporting, you must specify the time period, and it will only have expense data, not budget data, unless you use a budget tool, which we'll talk about later. In ConnectCarolina, you can run reports such as a trial balance to see similar or even the same data, just presented differently. In ConnectCarolina, it would be an accounting format rather than project management format that you find in RAM reports. Please also note that InfoPort uses the opposite signs of ConnectCarolina. It shows debits as negative and credits as positive, whereas the normal accounting signs have debits as positive and credits as negative. Next, we'll demonstrate a simple financial statement. The trial balance mapping will be used behind the scenes to generate the financial statements from the general ledger data. For example, account number starting with 111 roll up to a single or only a few cash lines on the financial statements. This is a very simple set of basic financial statements produced using only the 10 examples in this presentation. The balance sheet is known in governmental accounting terms as the statement of net position, and the income statement is known as the statement of revenues, expenses, and changes in that position. UNC's financial statements are within the ACFR, or the Annual Comprehensive Financial Report, and a link is provided in the appendix, or you can use your favorite search engine to find it. Here's a screenshot showing where you can find those. Next, we have a poll question. What is fund balance? The answer is assets minus liabilities. Next, Daisy will discuss some reporting options in ConnectCarolina.
Thank you, Nick. Hello, everyone. My name is Daisy Allen. I am also CPA, and I have been with the university for around 6 years. So next, we're going to see what's a trial balance. A trial balance is a report listing all the general ledger account activity of a chart string at a point in time. This report will include all business transactions for assets, liabilities, revenues, and expenses. Next slide, please. This is a simple example of a trial balance, summarizing the activity by account category. An important detail to note is that the trial balance should always equal to 0, which demonstrates that all debits, credits are in balance. Next slide, please. This is a query that can be used to pull the trial balance data. This query is available in ConnectCarolina through Reporting, Query Viewer, and you can search by the query name. This query includes all the components of the chart string, including project, program, and cost codes. Next slide, please. This is a pivot table created from the data pool using the query I just shared with you. As you can see, the data includes the activity for this project summarized by fund, source, department, account. A great thing about this query is that this actually includes the account description, as you can see. Next slide, please. I will go over some of the balance sheet items that you may see when managing a project. This may be especially helpful during the closing process. Next slide, please. In general, the balance sheet includes accounts that will include carrying balances. This means the ending balance for the previous period will be the beginning balance for the new period. Some examples for assets are cash, fixed assets, and accounts receivable. Some examples for liabilities are accounts payable and payroll liabilities. Next slide, please. For cash, we have a listing of some of the cash accounts you might see when running a trial balance. Even though you might usually view cash as a net amount, we wanted you to see the detail behind the scenes. There are many cash accounts in our chart of accounts. These are just some of the accounts that you will see probably more often. Next slide, please. For fixed assets, the university has a capitalization policy depending on the cost, type, and useful life. We have included a link of the policy that includes additional details. Transactions such as adding or transferring capital assets like equipment are recorded by the Asset Management Office. Also, it is important to note that Fund 29730 is the fund used for capitalization purposes. Fund 29730 is part of the trial balance and is part of your total fund balance, but because fixed assets are not consumed in the normal course of the business, they are recorded on a separate fund. Next slide, please. As Nick mentioned earlier, one of the components of the financial statements is the fund balance. So what is fund balance again? It's the total net worth of the fund, and both the balance sheet and income statement transactions will affect the fund balance. The normal fund balance over fund balance is a credit or negative amount. If fund balance has a positive amount, then it is in deficit. But remember, Infoport has the opposite sign. So if you're looking there, if fund balance is a negative, it is a deficit. At the top of the page, we have a formula on how to calculate the current fund balance. We start with carry forward, which is your ending fund balance for the previous year. For example, plus revenue less expenses recorded. Next slide, please. This is an example of a trial balance, which as you can see, has been highlighted into sections. First, we have the assets, total cash as a net amount for all the accounts 111%, accounts receivable, which is start with 113, beginning fund balance, which in this case is a deficit, a positive amount. The deficit means that probably that in the previous year, the expenditures were greater than the revenue recorded. Next, we have the income statement, which includes revenue recorded and expenses. So the calculated fund balance is the beginning fund balance plus revenue and expenses. Next slide, please. Next, we wanted to mention some of the items we usually receive questions about. Remember, the accounts receivable is cash expected to be received in the near future. AR balances should be closely monitored and should clear when payment is received. Accounts payable is cash to be paid after service has been received or an item has been purchased. Accounts payable balances should be closely monitored and should clear when payment is made. Also, we usually get questions about correcting expenses. Corrections are usually recorded through campus journal modules using correcting journals or JCRs. However, certain expenses accounts are not correctable through a correcting journal or a JCR, and they will need to be corrected or adjusted using other tools. Please be sure to refer to the campus journal matrix included on the appendix of this presentation for more detail. Next slide, please. We wanted to show you some additional tools available in ConnectCarolina that you can use to review balances. Next slide, please. First, we have the ledger inquiry. This is especially useful for research. We have included a navigation on the left side of the page. If you have never used this page before, a run control will need to be created by clicking on the Add New Value. Once the run control has been added, it can be used going forward. And all you have to do is click on Search. Once you click on Search, you will see your run control. Then click on the run control, and this will take you to the ledger criteria page. Next slide, please. On this page, you will enter the business unit, the ledger, the year, and the period you wish to review. At the bottom of the page, you can specify the fields you desire to include. In this example, we are using the percent sign or wildcard, which is telling the system, I want the total balance of all accounts to start with 1%, which is the total cash for this project. Then you will click on Search and you will see the cash balance by period. Next slide, please. As you can see the balances by period. One extremely useful tool on this page is the links in blue. By clicking the link, it will show you the transaction for that period or transactions for that period, such as journals recorded and any related vouchers or deposits. This is also a great report that you can attach when you need to add a cash report to a journal. Next slide, please. Now we have a polling question. What are some of the additional reporting tools you can use in ConnectCarolina? The correct answer is D, A and B. Next slide, please. Next, I want to go over some of the differences between the general ledger actuals versus budget ledgers. Next slide, please. So what is the GL actuals? The general ledger actuals is the official record of financial transactions posted to the system. These are the university financial reports for external reporting purposes. So what is the KK ledger? The KK ledger or budget ledger, also known as the commitment control ledgers, are financial management tools. The budget ledgers are driven by expenses, so the budget ledger will help to make sure the project is not overspent. Next slide, please. This graph shows the relationship between the general ledger actuals and the KK ledger. Any expenses recorded on the actuals ledger, let's say, for example, a voucher or a minor journal, such as a JBL, which is a billing journal, will decrease the available budget. As you see on this graph, stage 1 is when the journal is created. Then the edit process is run. Stage 3 happens alongside with the stage 2. This is when the budget is checked and is reduced. Stage 4 is when the journal is approved by the department and central office if applicable. And stage 5 is when the journal gets posted to the general ledger actuals. But let's assume this expense is no longer needed and this transaction is deleted before it's posted. Then the budget will be restored since it was never posted to the general ledger actuals. Next slide, please. Another useful page in ConnectCarolina is the budget overview. This page allows you to go and review the budget balances. Just like a ledger inquiry, if you have never used the before, a run control will need to be added. You click the Create a Run Control and this page will display. Next slide, please. Choose the ledger group at the top of the page, the business unit, and tab of calendar, as well as the period. On the bottom of the page, you can enter the project ID. Then click Search to see the budget for the specified period as well as the total expenses. Next slide, please. On this example, the available budget is 0, since the budget minus expenses is equal to 0. Next slide, please. Now we wanted just to compare the RAN report to the budget overview page in ConnectCarolina. As you can see, they match. The main difference between these tools is that the budget overview in ConnectCarolina will show you data live today, which means that any transaction that was created today will be already there and you could see that. But the RAN report will need to be updated overnight since it's feeding from ConnectCarolina. Next slide, please. Next, Nick will go over campus journals and some useful tips.
Thanks, Daisy. So moving on to campus journals, what are reviewers looking for? What will make them click the Approve button? This list here covers our highlights. As a rule of thumb, please note that the journal header description should be completed and agree to the journal lines and the attached supporting documents. A journal description should tell a reviewer what is happening in the journal, so they don't have to spend time trying to figure out the journal's purpose, and can make sure that the journal lines are accomplishing that purpose. The main things the reviewers are looking for are therefore meaningful, concise, accurate journal header descriptions within the character limits, the supporting documentation that justifies the journal entry and is agreeing to the journal lines. We also want to see that it's clearly for a reasonable business purpose. We'll be checking to see if debits and credits are reasonable based on the ConnectCarolina structure we've talked about previously. A correct journal source is used. For example, JSRs are for residuals and JCRs are for corrections. And also the correct accounting period. We recommend that you have a conversation about this with the people that review your journal entries, as it may be helpful to streamline your process and help everyone understand your needs. So for example, since expense is normally a debit and revenue is normally a credit, if a reviewer sees a journal with the opposite signs, it is a red flag for follow-up questions or denying the journal, unless the description and supporting documents clearly support it. Please also note that the JCR should be used for corrections that are needed, but it does not route to central office for approval and can only be used on income statement accounts. A JOT or a JOT is a last resort if no other type of journal can be used. Here we have the campus journal matrix, which is available online for your reference. It exists to help users understand the chart field strings that are allowed in each journal source type. One slide of the matrix is shown here, for example, as JCRs will only allow the funds, sources, and accounts listed here. And on the left-hand side, under the blue header, you can see the allowed debits. And on the right-hand side, under the green header, you can see the allowable credits. And the system will enforce these rules. These are just some examples of the different types of subsystem journals. For example, accounts receivable generate deposits that have journal source names ACR, ARD, ARM, and ARP. Accounts payable vouchers generate journals including ACC, PYM. The BI stands for billing. AM is asset management journals. GM is grants management journals. PAY is payroll journals, and there are many others. Next, Daisy will discuss some central office journals.
Thank you, Nick. When reviewing transactions, you may also see central office journals in addition to campus journals. For example, an ACS journals are recorded by accounting services. An example of an ACS journal is a funding co-share journal, which is usually posted monthly. But what is co-share? Co-share is for grants and awards not fully covered by the awarding agency or sponsor. Put in another way, a portion of the project cost is funded by non-OSR funds, such as the departmental, F&A, or institutional trust funds. In the example on this slide, the first two lines is the expense being paid by a non-252 fund, including a project ID. And the next two lines of this example is the accounting services journal funding the cash deficit created by the payment of this expense. Next, Nick will go over journal workflow.
Thanks, Daisy. Now I'll talk about the journal approval workflow, which starts when you submit a journal entry. You can look at the workflow or approval tab of the journal to see where it routes. So this process starts when the preparer of a journal edits and submits the journal, which routes it for approval. Campus journals require approval at a department level. Now, please be aware that self-approval is not allowed for any journals effective at the beginning of this fiscal year. Then, if there's a project, it will route to OSP for approval. And if there's a trust source, it will route to accounting services for approval. The journal source dictates the workflow as well in terms of the specific individuals it will route to. Those journals starting with J route to the central office, except for JCR, which are not routed to central office for approval. And now here's an example screenshot showing the approval path. In this case, there were multiple levels of department approval and then a central office approval. If this was awaiting approval, you would be able to click on it and see the list of available approvers. So this is a common question. Why are non-postable journals deleted? Well, first, a non-postable journal are those journals that include if they're not fully approved, if they have errors, if they are not submitted, if it was denied and not resubmitted, or in terminated status, which means edits were made after the original submission of the journal, but it was not then resubmitted. So why are they deleted at month end? Well, primarily because we're following university closing procedures and industry best practices. But on a practical note, the journal date cannot actually be changed and the month is already closed. Also, journal dates cannot cross months. and possibly most importantly to this audience, is that non-postable journals hold budget, and deletion of the journal releases that budget, as Daisy mentioned earlier. Next, we have a poll question. Why are journals deleted at month end? The answer is D, all of the above. And next, Hua will discuss DCB journals.
Thank you, Nick. My name is Hua Shen. I'm in accounting services. I have been with university for 17 years and with accounting service a little bit over a year. Let's talk about DCB journals. Next slide, please. Data collect batches called DCBs are managed by accounting services. DCB journal sources are specifically set up for recurring interdepartmental billing with large transaction value, all expenses, all location like PCAR. For example, for regular campus billing, JBL usually just has couple lines. DCBs have hundreds or thousands of lines. Some DCBs go through CBM, Customer Billing Management System. The batches may post daily, weekly, monthly, quarterly, or annually. It's departmental responsibility to provide correct chart field string for their DCBs and their default DCB chart field string if applicable. Next slide, please. Let's talk about some DCB for PCAR transactions. When you spend money on a PCAR for a project, you reconcile the transaction in Bank of American work system. You put some charges to your project chart field string as soon as the transaction posts there. But there is no budget check in Bank of American work system. So the transactions transfer to CBM. The CBM will validate all the transactions with their chart field string and budget check. If your transaction failed the budget check, it will charge to your departmental CBM default chart field string. Usually it's your departmental overhead account. If you did not see your PCAR transaction for the project that you reconciled in work system from RAM report, that might have failed budget check, falling to your departmental CBM default. From CBM, then the transaction will post to GL actual. To correct your transaction that fallen to your departmental CBM default chart field string, do a JCR on PCD journals. Next slide, please. Let's see the DCB workflow for PCAR. So you reconcile your transaction in Bank of American work system, and the CBM system validate chart field string and do the budget check. So if it's passed budget check or it's validate the transaction chart field string, it will go to ConnectCarolina GL with the chart field string you reconciled in works. If it's failed budget check, that would be fallen to your departmental CBM default chart field string and post to the GL. Next slide, please. You can search those transactions in InfoPort. Select the correct accounting period and the department. The easiest way, probably you can export Excel spreadsheet from InfoPort and then search the transaction number. They're called TXN number. You can identify your PCD journal ID. Next slide, please. Then you can go to Campus Journal module, select correcting GE. Put journal ID as shown on the right side. Search the desired chart field string. Next slide, please. You can select row that you want to correct. Proceed the correcting journal. If the line is grayed out, that means it has already been corrected and cannot be corrected again. Then you find that JCR that correct it and make the correction on that JCR. Next slide, please. Occasionally, you may see duplicate DCB transactions. Please contact accounting services. We can do some investigation and fix it. Now we will go to our final pool questions. Next slide. Where can you find your PCAR transaction if it is not where you expected? The correct answer, A, Department CVM default chart field string.
All right, that concludes our presentation. We hope you learned something new, and we appreciate your time listening.